This week, we're talking retail prices and export sales. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is ag economist Charley Martinez with the University of Tennessee. Charley, great to see you.
Good to see you too.
We talked to Josh last week, and it definitely was a little bit of March Madness of what's happening in terms of the markets. A little bit more of that this week, and we'll catch up on those, and we'll talk reports as well. So let's get in and find out what happened this week in the markets.
Yeah, so as you said, it was a little bit more March Madness last week than this week, but this week live cattle prices closed at $200 per hundredweight, which is 28 cents down compared to last week. But April live cattle futures were at $200.35, which was 8 cents up compared to a week ago. And March cattle or March feeder cattle futures was it closed at $277.58, which was actually up 60 cents compared to last week. Choice box beef was at $319.57 at the end of the week, which is actually 2% up compared to last week. And then kind of looking at other things like select box beef, it actually closed at $307.03, which was 1% up compared to last week. So not as much March Madness, but still up and having some continuing steam. If we look at the pork cutout, it closed at $97.01, which was actually down 1% compared to last week. But the national Base Hog Carcass was up to $87.40, which was a moderate 2 cents higher than last week. And then the April lean hog futures closed at $87.23, which is down 12 cents from a week ago. So, we lost a little bit of the March Madness steam going in to this week and into the tournament season on the pork side of things, and held pretty much steady on the beef side.
I think it's interesting when you look at what's going on with beef markets and sales in general. When we get into some of those regional sale barns, I know we focus a lot on Missouri this week just in our programming on the radio side of things. There was a lot of records set when we're looking at some 5 weights and 7 weights. When you see some of that volatility and some of those price spikes in those regional sale barns, what does that say about risk management or opportunity for producers right now?
Yeah, so I think when we see the volatility, right, if you're marketing animals and you're on the upswing, it is like you hit the jackpot, right? It's like, yeah, I really really hit it and thought through, and my strategy worked. But somewhat is the backside of that is the risk side. Whenever we're leaving money on the table, prices are still relatively high compared to from a historical perspective, the last couple of years. But I know you and I have talked about it many times over the last couple of years. But when you're marketing animals and you catch it on the downswing of things, even though the nominal prices are pretty high, it's kind of unfavorable to be leaving money on the table whenever prices are at the levels that they are. And even if it's 20 cents or 30 cents per hundredweight, given, whatever weight class and whatever animal you're marketing in, it's not fun to look at, what could have been. And so, in research that we've done here at UT and with other colleagues around the Southeast, we've looked at different risk management strategies and what helps and what doesn't help on the net price over time. But when we start thinking about high prices and producers start thinking, well, high prices are here, I don't need to put any risk management. It's not necessarily that you're, losing pennies or dollars per hundredweight in the high price realm and anything of that nature. It's more of the what if scenario. If the high prices are here one day and gone the next, or here this week and gone next week, and not only are you leaving money on the table, but you actually could be really hurting yourself from a profitability standpoint. And that's what we want producers to avoid, regardless of where you are. And I think, market reports like this and market programs actually help understand, where the trend is headed. But we know from week to week and within a week, we can see volatility occur, not only around the country, but in certain segments. And I think that's what producers, these prices are great. But if something was to happen that would really tank them, that would be quite unfortunate.
Charley, as we take a look at weekly slaughter numbers, definitely interesting as we are watching what's been going on long-term and in recent weeks for cattle slaughter and hog slaughter as well.
Yeah, so if we look at weekly slaughter numbers, cattle slaughter was at 585,000 for the week, which was actually up 7,000 compared to last week. But compared to last year, it was down 12,400 head. On the hog slaughter side of things, hog slaughter was 2.43 million head, which was up 16,000 compared to last week. And then compared to last year was actually down 23,000 head approximately. I think whenever we start talking about earlier about this March Madness inside the hog sector in particular, this kind of week to week steam that's kind of been building, it's kind of interesting to see. And I think as we've been ramping up a little bit, I think that's somewhat of the causing the response in the markets in terms of pricing and some of the either holding steady or the drawback that we're seeing on the hog side of things. And I think in the coming weeks, I think that will let us know where the market thinks I think that will let us know where the market believes it's headed, given the tariff talk and kind of the uncertainty that's centered around some of the speculation as to what's going to happen into the future.
That tariff conversation is going to, whether it's a cloud or an interesting footnote for the 2025 marketing year and just in general is going to be, I think, part of this conversation, maybe for the rest of the next 4 years. I'm not sure.
It'll be something to really monitor here, because we know that when we see macro changes occur, there is a shock that occurs, and the markets are going to respond as such. In the long run, these slaughter numbers, and as we go through the next couple of months, we know seasonality plays a part of this as well. It'll be interesting to see where the markets are moving.
Retail prices out this week. And when we talk about retail prices, I think it's important to note that it comes down to that demand element, because we don't have the price levels that we have anywhere without strong demand and continued demand for both beef and pork domestically.
Yeah, so I selfishly, in full disclosure, I watch the retail side a lot. If anyone has seen any of my extension programming, when I talk about the beef supply chain or the pork supply chain, there's a little caveat at the bottom that has a bubble for the U.S. consumer. And I always say, that whatever our demand is signaling to us will work its way back through the supply chain in conjunction with what happens at the farm side. And so I've always watched the retail report. And in particular, it's been kind of interesting to read every month. And so this week in February, the all fresh retail beef price increased to $8.31 per pound, which was up from $8.15 per pound in the January report that we had. And kind of to really highlight how it sounds like a lot, but to put it in perspective, the data that is used to estimate that is Bureau of Labor Statistics and ERS data. And when they put it out, they have historical data that goes back all the way to July of 1987. In this last report, the February price is the highest that it's ever been. And so if we put that also in perspective relative to 2024, in 2024 in February, it was at $7.83 per pound. The previous 5-year average was $6.48 per pound. And we know that in 2024, prices really kind of ramped up and got higher into the summer for the grilling season and in our seasonal demand that really peaks. When I see this January number increase up to what it was in February, to me, that signals that we're probably going to be having some increased prices in 2025 to levels we've never seen before, because we're already there. But how high can it get? Now, to also put that, kind of tying it back to other reports, we know that annual retail demand was at an all-time high over the last 24 years in 2024. So in 2024, we saw high prices. In 2025, we're already going past those prices. Well, in 2024, we had really strong demand to the point where it was the highest year in the last 24 years. I am wondering if this is going to be the year that we really test how strong the U.S. consumer demands the beef at the retail level. I think that when we see these reports and see these numbers, oftentimes producers are asking questions of, is the retail price scaring off the U.S. consumer? In 2024, it did not. And so in 2025, as we reach these new levels, I think that's really where we're going to start testing the demand of the U.S. consumer for beef on the retail side. And as in that same report, it has the pork numbers as well. And so in February, retail pork price was at $4.83 per pound, which is actually the opposite of beef. It actually went down from January into February. The price in February is the highest. It's the price in February was the first year that we saw a 10 cent or over a 10 cent decrease in the last year and a half. And then if we compare that to previous years, in February 2024, retail pork price was $4.76 a pound, and the previous 5-year average was $4.25 per pound. And so if we think about the pork industry, we know that prices continue normally to increase from the beginning of the year, and they peak out in September, October, somewhere around in that time frame, and then they come down that last quarter of the year. Well, seeing that we already decreased between January and February, is that just kind of an anomaly to what we usually see in pattern, or is that something that's going to start decreasing? If we look at our slaughter numbers on the pork side, as supply goes up, price goes down. So we might start seeing something that kind of goes against the normal trend on the pork side of things on the retail side. And so if we sprinkle in high-priced beef, we sprinkle in low-priced pork, it'll be interesting to see what the U.S. consumer demands at the retail case in the coming months.
How much are you watching as we see these beef prices push almost past their peak 2024 levels when if there's consumer swapping, or if we're starting to see maybe an exchange of a more reasonably priced or economical protein when we're thinking about grocery bills at large? And I think you've got to throw eggs into that conversation too, because if egg prices are so high, you're taking there's one item that's taking more of your grocery budget that wasn't there a year ago.
Right. So your question, is basically, if we have a consumer and they have a basket when they're going to the supermarket, things are starting to go up in price, in particular eggs. And you start to see a beef price to increase, and we have pork price kind of going down. One of the unfortunate things is that we don't really get really good data in terms of what are consumers buying. There's a data set called scanner data that records what's being bought at the consumer level by BLS, and within that data set though there's a lag effect, and so that lag effect we won't be able to see for quite a bit, and so we don't really get to see what consumers are buying month to month. But one of the things that we can see and watch is the wholesale prices. And so we know wholesale prices are derived from the demand of the consumer that, it works its way up, and we see that in the wholesale markets. Right now, currently in the wholesale markets, demand it seems to be strong, because while supply is somewhat increasing relatively, it's still holding pretty steady. And so from that way of thinking, if we think about to other reports that we've talked about, you and I personally here on the show, we're expecting consumers to still act accordingly with what they historically have bought. Now the question becomes: does eggs get to the point where they actually swap out or substitute protein? I was watching and listening to David Anderson at Texas A&M, and if we think about eggs and what eggs are used for, there's really no substitute, right? And so if we think about that from that perspective, as a good that's in the basket of a consumer as eggs increases, well, then that's essentially going to take more money out of the spending for other proteins that they would normally buy, which is beef and pork. Well, if we think about that, natural economics of budget constraints start kicking in. I would be interested to see if what's going to happen here in the next couple of months. And that's why I think the retail price reports give us an indication of demand, while at the same time wholesale price gives us an indication on the whole. It's going to be one of those things where you don't hear too many people saying, well, I'm taking out my eggs and I'm buying more steaks, right? So it's going to be interesting to see if, okay, I don't have as many eggs, I might not buy as much bacon for the week, or It could be something else in just terms of sausage or things like that that we also derive from pork and beef products, or the pork and beef carcass. So I think it's going to be interesting. That I wish we had more granular data that came out more frequently, but we got the wholesale and the retail reports.
A couple of weeks ago, Kenny and I talked about how breakfast could be one of the most expensive meals of the day when you think about bacon shortages, right? Like the stocks of bacon stocks in cold storage are down. It was like 39%. I can't remember the exact percentage, but I mean, everything. And when you think about eggs, it goes into baked goods. It goes into mayonnaise. I mean, like you could list them off. So it is it's more than just your scrambled eggs or your over easy eggs in the morning. It's going to make its way all the way through.
Yeah.
All right.
Yeah, it's definitely one of those things where I'm like, well, the kids might have to eat some more cereal during.
There's no substitute for eggs, Charlie. All right. Export sales are out this week. Weekly export sales is what we're going to talk about this week. And we'll talk monthly trade data in a couple of weeks as well. But as we take a look, obviously finite information and these elements of data are great for analysis. When you look at these weekly export sales, Charlie, what are you looking for in terms of trends or what is kind of happening on a global scale?
Yeah, so how I look at these weekly export sales, it's more about percentage changes if there's anything that's pretty drastic. And given the environment of tariff talk and producers asking questions, we've been watching these reports a little bit more closely over the last couple of weeks. And then luckily at the University of Tennessee, we have one of the best trades economists, and Andrew Muhammad, in our department. And so I have basically a cheat code that I can ask and pick his brain as well. And so in particular for this week and for our audience, I was really looking at beef and pork numbers and kind of just seeing if there was anything that stuck out. And so when I was looking at it, I found some things that kind of stuck out to me, and I was like, you know what, we should talk about it a little bit this week. And so I'll start off with the beef side of things, just because this was not as eye popping or kind of head scratching or surprising. Net sales for the week on the beef side of things were up 7% from the previous week. But down actually 13% compared to the previous 4-week average. So to put that in perspective, yeah, 1 week we actually increased, but over the long run, we're seeing net sales decreasing. Exports were up 21% from the previous week and 12% up from the previous 4-week average. So while net sales in terms of volume or in terms of beef sales going out, or net sales was going down, exports seemed to be kind of surprising and had a strong week compared to the previous one. Now, put that in perspective, total volume, there's a kind of a nature to it where the volume can be up, but the value can be down of what's being sent out, right? So that's something that we have to watch, and that's where that monthly data from FAS really helps. But the destinations for beef were primarily to South Korea, Japan, China, Mexico, and Taiwan. And so, our normal trading partners were still active, last week when it came to the beef side of things. But the pork side is what was really surprising. Net sales were at 20,300 metric tons for that report. From a marketing year perspective, it was actually the marketing year low, and it was actually down 52% from the previous week. So we saw a drastic change in basically sales get cut in half, net sales get cut in half for the week compared to the week prior. And so naturally, I think that is a function of what the market is reacting to in terms of tariffs and expectation and kind of what they're anticipating. And if we think about exports, they were changing at moderate tones. And so again, this is the first one is net sales. So imports, exports, imports and exports, and sales and volume. But if we look at the metric tonnage in terms of where they were going, the primary trading partners were Mexico, South Korea, Japan, Colombia, and China. And China was actually lower compared to the previous week. So I think the overarching theme of the only reason why I really cared about this report is because producers are asking what can tariffs, what's the impact we can see. Well, if we look at this report for this week compared to last week, the pork market is responding in a way that they're actually having fewer net sales occur. And if we think about fewer net sales occurring, and now keep in mind it's only 1 week, even though it's 1 week, it's pretty low. The question is going to become, as we've ramped up the hog slaughter numbers, and we're not having strong export numbers leaving and export volume leaving the U.S. What does that do to the domestic price of pork? And that's where I think that's why we're starting to see some decline in the retail price, the price series that we talked about earlier. But also, I think that's why we're seeing some of the futures markets react that way in terms of holding steady to decreasing some, depending upon the month that you're looking at. And I think, if we watch these reports over the next couple of weeks, that's going to give us an indication of what the market thinks is going to be our demand, around the world when it comes to U.S. pork. And I think this was the first week that I was kind of like, okay, there's kind of a sticker shock there that we haven't seen, but it's kind of somewhat expected given the environment that we're walking into. And I saw a report where the Smithfield CEO was talking about the struggle to move some of the off-fall product and kind of where they were going to go with that product in the coming weeks. And so those are things that I think are part of this net sale data conversation, and where do we move product that historically U.S. consumer doesn't want? What do we do with it then? And I think in the next couple of weeks, I was talking with Dr. Muhammad before our recording this afternoon, and it was like, hey, another 2 to 3 weeks, we're really going to have a clear picture as to what the impacts are and what we can expect moving forward.
I always think that that's one, as we wrap up today, Charlie, I think that's one thing that's of note for viewers and listeners is that we're not always exporting. I mean, we do export high quality product to some specialized areas, but these are products that we don't have value for in the U.S. for the most part, or for a large chunk that are going to trading partners who treat them as delicacies. And so the groups like the U.S. Meat Export Federation have done fantastic work to be able to develop this demand in these markets. And I think that's more than just, tariffs and trade conversations. It's not just hams going into Mexico. It's other products too. And I think that there is going to be more than just the meat that meets the eye, right? When it comes to disruptions for demand and how it impacts prices long term.
100%. If you think about the average consumer or the average, pork or beef consumer in the U.S., not a lot of people eat cow tongue for breakfast tacos or cheek meat for breakfast tacos. And I love that product. I love eating those kind of tacos. One of my favorite things about going to South Texas whenever we make our trips down south. But we've already talked about eggs being increasing in prices, and so it's other breakfast ties to it. But what do we do with that product when we can't move it to other parts of the world? And so I think you're right on. And people think that countries are the ones that are trading, but it's really companies, and the products that are being traded are somewhat, and oftentimes products that the U.S. consumer doesn't want, and we find value in them in other markets. And coming in the coming weeks, what happens with those products is going to be a real question.
All right, before I let you go, next week's report, cow on feed, and I think livestock slaughter out next week. Charlie, as you prepare for those, just as an economist in general, I think where Josh is up next week to talk about those. What are you watching, and what are you looking for? I think both cattle on feed and in those livestock slaughter numbers.
Yeah, so the cheater answer for the cattle on feed, or the obvious answer, is just heifer makeup and kind of what's sitting in the yards, but also just total numbers. We started the year thinking about record production in the first quarter of the year, and so to kind of see what's in the supply, and then also what can we expect in the coming months is something that the cattle on feed report provides every month. And then when we start thinking about in terms of if we are anticipating this increase in supply, or this increase in total production that we were, and I say relative to what we were expecting at the beginning of the year when you and I first had our first show in January. I'm interested to see how that's going to how is that holding true or not true. And then the other report was that you were asking was,
I think livestock slaughter is out next week, so I'm assuming beef cow slaughter, looking at that percentage of as well.
Yes, and so those are the two key things. It's the heifer makeup and what's out there, but also just total production and what's actually happening, because we've been monitoring weights of cattle in terms of slaughter weights and things of that nature, and so it'll be interesting to see where those are moving forward, and kind of it'll give us a good indication in terms of what is being demanded of those animals coming out of the feed yard in terms of weights and things of that nature. But I think it's something else that it'll kind of be indicative of is we've been starting to have more cattle come in from Mexico, given the New World screwworm that hit us in November and December. I'm interested to see if those are even having any impact in the cattle on feed now, because we have seen a couple of weeks of not necessarily high numbers of cattle coming in, but there's been weeks where there's a pretty good chunk of cattle coming in from Mexico in the last couple of weeks. So that'll be something interesting to see if it's had any change at all in terms of the total numbers, and in particular the weight classes, when you look at the demographic of the weight classes that are in the of cattle that are in the feed yard.
Charley, great to see you.
Good to see you.
We'll catch up in a couple of weeks.
Yes, ma'am.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what happens with commodity markets twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.